Hey everyone, OnSemi reported fourth quarter and fiscal year 2023 earnings results on February 5th. In this video, I'll review those quarterly earnings results. I'll also update my recommendation for OnSemi stock. I'll let you know after these earnings results if the stock is a buy, hold, or a sell for long-term investors. I'll look at not only this most recent quarter's earnings, I'll take a little bit longer term view back towards its history, and I'll look forward towards the next 2 years, its prospects, bring it all together along with its valuation to determine if I think this stock is a buy right now. So let's get into the numbers.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, OnSemi reported fourth quarter earnings that had the company management saying our momentum continued this past year as we achieved record automotive revenue and 4x year-over-year growth in silicon carbide revenue. Looking ahead, we're driving innovation beyond silicon and silicon carbide with our upcoming analog and mixed signal platform to further our leadership in intelligent power and sensing solutions. So investors are looking ahead, hoping that next-gen technology from OnSemi can drive revenue growth because growth has been missing for OnSemi. You can see here revenue of 2.018 billion in the fourth quarter 2023 was down from 2.1 billion in the fourth quarter of 2022. Gross profit margin also decreased to 46.7%, down from 48.5% in the same quarter the prior year. Operating profitability also fell to 30.3%, down from 33.5% in the same quarter the prior year. That operating profit margin decrease was a near 10% decrease and hurtful to be sure, although I will say an operating profit margin of 30% is a solid profit margin, very solid profit margin. In my opinion, anything above 10% is a good profit margin. Anything above 20%, you're starting to get into the good, really good, solid profit margin territory. And when you get into 40% or above, now you're in excellent territory. 50% and above is already in rarefied air. Very few companies have operating profit margins of 50% and above, and then those above 60% are the relatively few companies. The company with the highest profit margin that I know of is Visa, with an operating profit margin just north of 65%. So that's like the ceiling of as high as it can go. So 30% is good. It's very good to be sure. Looking at the full year, which ended December 31st, 2023, OnSemi's revenue fell to 8.25 billion. That was down from 8.326 billion in the same year, 2022. Gross margin fell 47 to 47.1%, down from 49% in 2022. Operating profit margin, however, increased in 2023 to 30.8%, up from 28.3% in 2022. So for the full year, the company expanded the operating profit margin, but in the most recent quarter, it fell from the same quarter the prior year. In my opinion, looking at the full year picture is more informative than looking just at the most recent quarter. So overall, to analyze profit margin, it was a good year for OnSemi because year over year it increased despite revenue decreasing. It's harder to increase your operating profitability with revenue decreasing because you're not leveraging your fixed asset base as well as if revenue were to increase. So it takes more skill in managing your expense, managing your business to drive profit growth when revenue is decreasing. Looking at its outlook for the first quarter of 2024, management is forecasting revenue between 1.8 billion and 1.9 billion, with gross profit margin of 44.4% to 46.4%. So looking at the midpoint of these forecasts, let's look at 1.85 billion in revenue and 45.4% in gross profit margin, and let's compare it to the most recent quarter. You can see that would be a sequential decrease in revenue from 2.018 billion down to 1.9 billion, and a sequential decrease in gross profit margin from 46.7% down to a midpoint of 45.4%. So more trouble ahead for OnSemi, revenue decelerating sequentially, profit margin decreasing sequentially, not what investors like to see when they're looking at a company that is in changing mode. So of course, if you want to know a little bit more about OnSemi, they have a focus on automotive and industrial end markets. The company is accelerating change in megatrends such as vehicle electrification and safety, sustainable energy grids, industrial automation, and 5G and cloud infrastructure. OnSemi offers a highly differentiated and innovative product portfolio, delivering intelligent power sensing technologies that solve the world's most complex challenges and leads the way to creating a safer, cleaner, and smarter world. So all of these end markets that OnSemi is serving are in growth mode. The electrification, of course, the electric vehicle industry, industrial automation is going through its growth stage, and 5G technology, of course. So the end markets are growing, but OnSemi is finding it difficult to expand in those end markets. Looking forward the next 2 years, for fiscal year 2024, Wall Street analysts expect OnSemi to have revenue decrease by 2% year over year and earnings per share to fall by 8.2%. So not a good year expected for OnSemi in 2024. For 2025, things expect to get better with revenue growth of 9.8% and earnings per share growth of 18.5%. So 2024 will be challenging, but once OnSemi gets through it, hopefully without too much damage, 2025 is shaping to be better. Looking at the company longer term, you can see going back to July 2021, it has generated nice revenue growth on a trailing 12-month basis, increasing from $5.5 billion to $8.33 billion in the most recent trailing 12-month period. And then its operating profit margin has scaled up nicely to 32.22% in the most recent update, and that's been up from about 15% in 2019. Making nice progress, revenue growth, profit expansion, and valuation is not too expensive, trading at a forward price to earnings of 14.05. This is about the midpoint where this stock has traded for, according to this metric, going back till July of 2021. It was cheaper, right? There were moments where the stock was cheaper, and there were moments when the stock is more expensive. At a 14.05 valuation, it's about the midpoint where this stock was trading for. So for long-term investors wondering if OnSemi is a buy, hold, or a sell, I would say the stock is a borderline buy. It's not a screaming buy. As I showed you, 2024 is shaping to be a difficult year. 2025 is shaping to be a better year. So given the difficult forecast ahead for 2024, it feels like investors may get an opportunity to buy this stock at a lower valuation, perhaps at some point in 2024. Even still, if you want to get into it now, I don't think it would be a bad move, given its 2025 and beyond forecast looks solid, longer term solid profit margins, expanding operating profitability, revenue growth, and a reasonable valuation. So with all that said, I would say OnSemi is a borderline buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.